Awesome. All right. I'm going to show you guys how to actually access the Cashtrap strategy. All right. So you want to log into your im.center. All right. You want to log in. And once you log into your center, to the left-hand side, you're going to see strategies. All right. You want to click on strategies. All right. Once you click on strategies, you want to scroll down. All right. And you want to click on HFX Academy. All right. HFX Academy. All right. And you want to click on the hourglass. All right. So if you have the elite package, all right, you already have access to the hourglass. All right. If you only have the basic package or just the HFX package, and you notice that your hourglass is black and white, you will need to go to your back office, all right, im.academy, and go to where it says shopping cart and purchase the hourglass product for $22, all right? So once you have that, you want to click on the hourglass, all right? Now, once you click on it, all right, this screen will pop up, and you want to make sure that you go to the top where it says strategies. So the hourglass has 2 strategies in it, all right, but we focus on the Cashtrap strategy, and you want to click right here, right where it says Cashtrap, and this is the strategy, all right? This is the strategy. Very, very, very simple strategy, all right? And you guys are gonna see tonight how simple it is, all right? We made it super, super, super simple with easy to follow steps, all right, for you guys to absolutely crush these markets, all right? Now, when you're looking at the Cashtrap strategy, all right, right over here to your left-hand side, these are the toolbars, all right? You can utilize, different tools right over here. Right over here, you're gonna notice where it says 5M, all right? So this strategy, we're looking at the 5-minute chart, all right? So this chart is on the 5-minute time frame, all right? Right over here is gonna let you know the pair that you are looking at, all right? Euro JPY, all right? Now, as you can see right over here, it says market is closed, all right? So today is Saturday, all right? The market is closed on the weekends, all right? So when the market is open, you will see a green dot right over there letting you know that the market is open, all right? So tonight's training, we're gonna train specifically on the strategy. We're not gonna be taking trades, obviously, because the market is closed, all right? But we're gonna get you guys in tune to understand the strategy, understand the steps. So when we have part 2, all right, of our training, all right, by Mr. DeAndre Tinson tomorrow night, all right, you will able to look at the same steps during a live market, all right? So that'll be tomorrow night with Mr. DeAndre Tinson, all right? And right over here on the left-hand side, you are going to have your alert panel, all right? Now the alert panel, this is where the different trade ideas pop up, all right? So we literally have a robot in place that updates us and lets us know when the trades are coming about, all right? And this strategy, we only look at 5 pairs, all right? So if you are taking notes, you wanna write this down. These are the 5 pairs that we are focused on this strategy, all right? First pair is USD JPY, all right? The next pair we look at is USD CAD. The third pair is Euro USD. The next pair is Euro JPY. And the next pair is Eurocad, all right? So you will notice that these are the only 5 pairs that this strategy, all right, will update, all right? So that's good. So we're not all over the place. We can understand that we're only looking at 5 pairs at a time, all right? And you will understand once you're trading more and more, you will understand that each pair usually has its own characteristics, all right? So that's good to know. So only 5 pairs that we're looking at. Now, before we actually go into the strategy, I also want you guys to look at, all right, the chart and understand what you guys are looking at, all right? So there's a lot of new people on the call, so I want to make sure you guys are understanding what you're looking at, all right? So if you just want to look at the top portion of this chart, as you can see, there's 3 different parts to it. You can just double click on the top portion and it'll give you the full screen, all right, of this chart. All right, now the very first thing that we want to look at, okay, are these red and blue things right here. All right, for the new people, these are called candles, all right? So this red candle right here and this blue candle right here, these are called candles, all right? Or candlesticks, however you want to call them, all right? Candles, all right? Very simple, all right? These are called candles. And these let you know where price is going, all right? So the red candles, price is going down. The blue candles, price is going up, okay? Red candles, price is going down. Blue candle, price is going up. So being that we're looking at it on a 5-minute time frame, all right, each candle represents 5 minutes in the market. So this was 5 minutes. This is another 5 minutes. This is another 5 minutes. This is another 5 minutes, okay? So when you're looking at these candles, the red candles, the 5-minute time closes at the bottom of the candle. All right, so the red candles, they open at the top and they close at the bottom. The blue candles open at the bottom and close at the top. All right, very important to know. All right, so those are called candles. Now, these red and green things, all right, these waves that we're looking at, so like this wave right here, all right, and this green wave right here, these are called Bollinger Bands. All right, Bollinger Bands. Okay, Bollinger Bands. Now, what Bollinger Bands do, they act as a moving support and resistance, or they act as a moving ceiling and a floor. All right, so what you will notice is that the candles will always be in between the red Bollinger Bands and the green Bollinger Bands. All right, so very simple to look at. This is how simple you want to look at these Bollinger Bands, all right? When you see price going towards the top, towards the red Bollinger Bands, all right, look for price to come down, all right? It's going to bounce as a ceiling and push right back down. And when price approaches these green Bollinger Bands towards the bottom, look for price to shoot back up. So if it's towards the red, you want to look for a put or market to come down. If it's going towards the green, you want to look for a call and price to go up. All right, if that makes sense, drop a 555 in the chat. I want to make sure you guys really understand this. All right, so if that makes sense so far, put a 555 in the chat. Beautiful, the family's with me. Let's go. Okay, so now, what you'll also notice, all right, is this purple line. All right, this purple line is very important. And as you will see in one of the steps, you'll see how critical the purple line is, okay? Now, the purple line will let you know the trend of the market, all right? It'll let you know the direction of the market, all right? So, when you notice, okay, oops. When you notice the purple line at the top of the Bollinger Bands and the candles, so pretty much on top of everything, all right, keep that in mind, you will notice that the direction of the market, all right, will be going down, okay? It'll be going down. So that means when the purple EMA is at the top, we want to look for down arrows. We want to look for puts, okay? Because we want to follow the trend of the market, all right? The trend is your friend, all right? The trend is your friend. Now, when the purple EMA line is at the bottom of the candles and at the bottom of our Bollinger Bands, we can see price is now on an uptrend, all right? So we want to look for calls. We want to look for up arrow trades, okay? And when price is in the middle, all right, of the Bollinger Bands, okay? When price is in the middle of the Bollinger Bands, this is called consolidation, all right? So when it's directly in the middle, this is called consolidation. Now, when this happens, price, all right, it can start up here, and then it could go down here, and then it could bounce right back up. All right, so it can go, you can take trades in either direction. Now, here's the thing. If you are brand new, I would not take trades when the purple EMA line is in the middle. You can get faked out, all right? Even myself, I don't like taking trades when the purple EMA line is in the middle between the purple, when the purple line is in the middle of the Bollinger Bands, all right? I do not take those trades, all right? And if you do take those trades, you want to take those trades at a very low risk, all right? So that is the purple EMA, all right? So now that we have all of that set up, let's actually take a look. Let's take a look at the actual strategy. All right, let's take a look at the actual strategy. All right, if you guys can see this slideshow, all right, type a 333 in the chat. If you guys can see Cashtrap strategy, type a 333 in the chat. Beautiful. Family's with me. Let's get it. So this is the Cashtrap strategy. All right, and here you're going to learn a 5-point step system, all right, to actually take these trades. All right, so let's get to it. Now, understand there's going to be 3 types of trades when you're taking these Cashtrap trades, all right? 3 different types of trades, all right? Because what we're looking for, we're looking to calculate points, all right? The points are just confirmations for us to take the trade. The more points, the better the trade. The more confirmations, the better the trade, all right? So you're gonna have 3 types of trades. You're gonna have a good trade, which equals 3 points, a great trade, which equals 4 points, and an amazing trade, which equals 5 points, all right? Now you can also, what I like to do is set up different risks, all right, depending on the trade. So if I'm happen to take a 3-point trade, it's just a good trade, I'm only gonna risk 1% of my account on a good trade. If you find yourself with a great trade, it's about 4 points, risk about 2% of your account. All right, because we're not in this to just, make $1 million tomorrow, all right, or hope. All right, we want to really be diligent and compound our money, all right, and grow our accounts responsibly. All right, so if you get an amazing trade, all right, 5 points, you can go out and risk 3%. All right, so if you guys can hear me now, all right, drop a 333 in the chat. If you guys can hear me now. All right, perfect. All right, so a good trade, which is 3 points, 1% risk, great trade. All right, great trade at 4 points, that's a 2% risk. In an amazing trade, 5 points, you can risk 3% of your account, all right? Very important. Now, how do we go ahead and actually calculate these points, all right? So here's step number 1. This is the first thing that you want to look at when you're opening up your Cashtrap strategy, all right? Step number 1, you want to identify where the purple line is at, all right? Also known as the EMA, all right? Now the value of the purple line is a 0.5 point. Now it says value plus or minus, meaning if it's in your favor, you add 0.5 point. If it's not in your favor, you're gonna take away 0.5 point. All right. But what you will know is that you will never take a trade without this purple EMA line in your favor. All right. So the very first thing you want to look at when you're looking at the purple EMA line is if the purple line is above the candles in the Bollinger Bands, meaning above everything, you want to look for a put or you want to look for a down arrow. All right. If the purple line is below the candles in the Bollinger Bands, pretty much below everything, you want to look for a call. All right. You want to look for an up arrow. All right. So here's the source to the purple line. All right. Because when I first started trading in Cashtrap strategy, myself and DeAndre, we were taking literally like every trade. right? We wanted to figure out which trade setup gave us the highest percentage to win the trades. And what we realized is that the trades that we were losing is when we were taking trades with the arrow pointing directly towards the EMA line. So here's the source to the purple line. When the purple line is at the bottom of everything, meaning below the candles and below the Bollinger Bands, only take up arrow trades. And when the purple line is at the top of everything, all right, at the top of everything, meaning above the candles, above the Bollinger Bands, only take down arrow trades, only look for puts. So if we go back to the strategy, the very first thing that we want to look for is the purple line. We identified that the purple line is below everything. It's below the candles, below the Bollinger Bands. So if the purple line is below everything, right? Purple line below candles, below Bollinger Bands, we want to look for a call on up arrow. The arrow must, all right, this is a must. The arrow must be pointing away from the purple line to take a trade. Especially beginners, especially, all right? So if we go back to the strategy, we can see the purple line is at the bottom. The arrow is going up, right? It's pointing away. We want the arrow to point away, all right, going up. We never want to see the arrow like this pointing towards the purple EMA line. We don't want to see that, all right? We want to see that arrow pointing away, all right? So the purple line is at the bottom. We have our up arrow. Perfect. That's exactly what we want to look for. That's the first thing that you look for. If you don't have that, you go on to the next trade. So step one goes right in line with step two. Identifying the arrow. Is it an up or down arrow? Now each arrow, the value is 3 points. So every arrow that pops up is an automatic 3 points. All right, an up arrow is a call, down arrow is a put. All right, so the source for the arrow must be pointing away from the purple EMA. The arrow must be pointing away from the purple line for you to take a trade. If you guys understand that, drop a 555 in the chat. Because that right there is going to take away a lot of your losses. All right. If you guys can hear me now, drop a 555 in the chat. There's a lot of value being dropped. This is why we're having challenges right now. Right? Because they understand, once you guys understand the strategy, there's going to be so many 6-figure traders popping from the maximum impact group. This is why we're having Wi-Fi issues right now. So I'm excited. That means we're doing something right now. All right. So the arrow must be pointing away from the purple line. It's that simple. Arrow, purple line, arrow pointing away. We can go on to the next step. That's exactly what we want. All right. That leads to step number 3. The currency strength meter, very important. All right, the value is a plus or minus 1 point. Meaning if the currency strength is in our favor, we're going to get 1 point. If it's not in our favor, we're going to take away a point. But this is going to save you guys any issues from taking away a point or trying to figure out what trades to take. These first 3 steps must be in line for you to take a trade. These first 3 steps are mandatory for you to take a trade. The first 3 steps out of the 5 are mandatory. All right, so for step 3, the currency strength meter, you want to have this website up, livecharts.co.uk. So anytime you pull up your Cashtrap strategy, you want to pull up another tab, all right, and you want to go to live charts, all right, and make sure you click on currency strength meter, all right. Once you click on currency strength meter, you're going to actually see how strong and or how weak each currency is. All right. So the more bars means the stronger that currency is at the time. So you have the euro with 2 bars, the Great British pound with 4 bars, right? The US dollar very strong. Now what you want to do is every time you come to the currency strength meter, all right, you want to refresh it. Because when the market is open and you're trading, the currency strength goes up and down, all right, and you want to refresh this every 5 minutes. All right. So every time you go to the currency strength meter, just make it a habit to quickly refresh it. All right. So you can get the latest update. So now when we go back to the currency strength, if the first currency is stronger, you want to look for a call. You want that price to go up. If the second currency is stronger, you want to look for a put. All right. So if you're looking at our chart, we're looking at Euro JPY. The first pair is Euro. The first currency is Euro. The second currency is JPY. So if we have the purple line at the bottom, we know that we're looking for a call. That means we're only looking for an up arrow. If we're only looking for an up arrow, that means we are looking for the first currency to be stronger than the second currency. So that means we will need the euro to be stronger than the Japanese yen. So then you go to your currency, you refresh, the euro has 2 bars, the Japanese yen has 1 bar. It's stronger. You're set up to trade. Just with those 3 confirmations, you can go and take the trade. If that makes sense, drop a 333 in the chat. So I want to make sure you guys are hearing me. So I know the Wi-Fi is being a hater right now. So to make your trading experience much better and more lucrative, you need these first 3 steps. First thing you want to look at is the purple line. Is it above or below everything? If it's below everything, that means for the next step, I'm looking for an up arrow. All right, it all goes in line. Purple line at the bottom, I'm looking for an up arrow. If I'm looking for an up arrow, I'm looking for the first currency to be stronger than the second currency. If those 3 things don't match up, add up, don't take the trade. Because we're about sniping the market. All right. We're looking for the precision entries. All right. We should be able to clear these trades in 3 minutes or less with precision. So these first 3 steps is what's taking myself and DeAndre's trading through the roof. Shout out to Drissa. Don't take any trades without these first 3 steps. Now, are you going to be 100%? No. But I promise you, you'll win a whole lot more than you'll lose if you just follow these first 3 steps. The next 2 steps are just added sauce. All right? It's just added sauce. Step number 4 is the stochastic. All right? This second part down here, where you see the red line, dotted line and the green dotted line, this is the stochastic or the stock. This is very simple. Very simple. If the black line is above the red dotted line, look for a put or look for down arrows. If the black line is below the green dotted line, look for a call or look for an up arrow. The value of the stochastic is 0.5 point. So if we're taking a look at this trade on Euro JPY, first step, look at the purple line. It's at the bottom of everything. That means I'm looking for an up arrow. Boom, I got my up arrow. That means I need for the euro to be stronger than the Japanese yen. Go to currency strength, refresh. Boom, Euro 2, JPY 1. So I already know I'm going to take this trade. But now let me look down here just for some more added sauce. Did the black line go below the green dotted line? No. So I don't get no points for that. Step 5 is the same exact thing for the RSI, the relative strength index. This section right here is the RSI. Same thing. For an up arrow, I'm looking for the black line to be below the green dotted line. It went below the green dotted line, so I got a 0.5 point right there. So we got 3 points for the arrow, another 0.5 point for the purple line being in our favor, so that's 3.5. We have the currency strength in our favor, that's 1 point, so we have 4.5 points. All right, 4.5 points. And then we have the RSI in our favor, that's 0.5 point. That's a 5-point trade. So this is a 5-point trade. That means this is an amazing trade. That means we should be confident in taking this as a 3% risk. All right. Now the market is closed. This trade already happened. But as you can see, once the trade candle flipped over here, once the arrow flipped over here, boom, you see this blue candle that went up? That was more than you needed for the trade. And you would have cleared this trade easily. All right. So you want to wait. You want to be prepared that candle before when you're taking your entry. All right, before you take a trade, because this is very fast. So when this candle was going down towards this green Bollinger Band, you know that, okay, the next candle, the arrow got to go up because it's going to bounce off of this green Bollinger Band. All right. Now, for your entries, for your entries, you want to enter at the bottom of an up arrow. All right, so let's say you have an up arrow right here. All right. This is your up arrow. All right. Price, you want to enter at the bottom of an up arrow. All right. So your entry, you want to look for it somewhere around here. And wherever your cursor is at, if you look to the right, you can see price. So if I took let me see, a horizontal line and I put it right here, I'm looking for my entry at 557. For a down arrow, you want to enter at the top. All right. You want to enter at the top of the down arrow. So you want to enter right around there. You want to wait for price to pull back right around here. And then you want to look for you want to hit put. So the bottom of an up arrow, enter top of a down arrow, you enter. If that makes sense, put a 777 in the chat. So I truly believe this is the easiest strategy for anybody to understand. So let's take a look at another trade. Let's go to USD CAD. All right, this is horrible. I wouldn't even take this. All right, because you want your purple line, you want it to be above everything. You see how the Bollinger Band is still in between. The purple line is still in between this Bollinger Band and this Bollinger Band. Stay away from setups like this. This is no good. Like, you leave this alone. Like this, no good. I'm not taking this trade. No good. I don't want the purple line in between the Bollinger Bands. All right, leave that alone. You just go on to the next trade. Let's take a look at Eurocad. All right. So if I'm looking at this trade, if I just opened up my chart and I saw this trade, I'm going to go back to step one. And the more you do this, the faster it's going to be in your mind. So step one is the purple line. Identify where the purple line is at. Purple line is at the top of everything. See the Bollinger Bands? It's on top of everything. So that means if it's at the top, I'm only looking for down arrows. I'm only looking for puts because it's on a downtrend. See how the market has been coming down. I want to follow the trend, right? The trend is your friend. All right. So here, this arrow is giving me an up arrow. All right. So I would not take this trade, but this is what I would do. I would wait for the next 5 minutes for the next candle to open up. Because if price is pulling up towards this red Bollinger Band, the next candle or the next two candles have to be red candles coming right back down. Why? Because it's approaching its ceiling. And once price hits that ceiling, it's going to bounce up and it has to bounce right back down. So I would keep this trade in mind for the next 5 minutes. All right. So identify where the purple line is at the top. We wait for a down arrow. Once we get our down arrow, let's figure out our currency strength. If we're looking for a down arrow, type in the chat which currency should be stronger, the first or the second. Type first or second. If we're looking for a put on Eurocad, all right, which currency should be stronger, the first or the second? Second, absolutely. So simple. See how easy this is? All right, trading made easy. All right, the second should be stronger. So that means we'll go to our currency strength, we'll refresh it. The euro has 2 bars, and CAD has 5 bars. Perfect. And it's much stronger. Here's some more sauce. I didn't put it in the slideshow, but here's more sauce on this currency strength. You want your currency to be stronger by at least 2 bars. By at least 2 bars, you want your currency to be stronger. So if I'm looking at Eurocad and I'm waiting for a potential put, and I see euro only has 2 bars and the Canadian dollar has 5 bars, that's even better. All right, I'm licking my lips at this point. I'm waiting. All right, because that's what you want. When you have currencies that are the same currency strength or maybe 1 bar off, you'll notice a little bit more delayed time for us to clear trade. So if anybody was on our Friday morning session, all right, the special Friday morning session, we had a couple trades where the currency strength were the same. So let's just say for a put, we were not in profit for a little while and we had to roll over. Why? Because it caused a little bit more consolidation before it actually made its move. So for the currency strength, develop the patience to wait for at least two or more bars in difference between the two currencies. All right. So now that we know that the Canadian dollar is super strong and the euro is super weak, next thing we look at down here, we don't have no half a point here or half a point here, all right? But we got all we needed with our first 3 steps. With those first 3 steps, you got all that you needed, all right? And then you take the trade, all right? And the strategy is that simple, all right? The strategy is that simple. For your entries, develop the patience to wait for price to come down here, all right? And probably next week, all right, I'm gonna really go in on the entries and show you guys exactly what I look at for entries. So there's a little bit more sauce besides taking at the bottom of the arrow and the top of the arrow. It's a little bit more sauce. But I wanna make sure you guys get this at least, because if you guys get this at least, and you're taking 3-minute trades, you should be able to clear no matter where your entry's at, as long as you have those first three steps in line, all right? So we're gonna run through the whole, this is exactly the mindset, appreciate that, David. This is the exact mindset that you wanna go through, all right? And after this, I'm gonna answer all questions, all right? So as soon as you open up your Cashtrap strategy, right? So let's say I X out of all of this, all right? I go into my Cashtrap strategy. I wanna open up my Cashtrap strategy. All right, I wanna make sure I go to strategies and open up Cashtrap. Once I have my Cashtrap open, the next thing I wanna open up is my currency strength meter. I wanna make sure I have my currency strength meter in place, all right? Obviously, the next thing that you wanna open up, all right, obviously is your broker, all right? I use VitaForex.com, right? So you wanna open up your broker. And then the next thing that you wanna open up in the beginning, before you trade, before you look at anything, just like David mentioned, you wanna look at ForexFactory.com. All right, because you wanna make sure, you wanna look for, is there any news happening at the time that I'm trading? Because right now you guys are getting the sauce to be able to trade besides 11 a.m. and 11 p.m. on the live trading calls. You guys are on the call right now because you guys want to trade and make money whenever you feel like it. And that's what we're teaching, and that's what we're educating you guys to do, is to make money when you feel like it, right? To be able to say, you know what? I don't have nothing going on right now. The kids are sleeping. Let me pop open my laptop and make a couple $100. That's what you guys are getting right now. So when you go to forexfactory.com, you want to click on the calendar, all right? Because you want to make sure if there's any red folders happening right now, all right? This is the list of all the news that's happening around the world, depending on each currency, right? So you can go right over here to where it says today. Just click on today. Obviously, it's Saturday, so there's no news, all right? Tomorrow, let's look at Monday. All right, so Sunday, when the market opens up, all yellow folders. Monday, what you want to pay attention to are the red folders. All right, the red folders are called high impact news. So that causes the market to move in a very volatile way. All right, it makes the market move in a very volatile way. So all you're looking for on Forex Factory are red folders. So on Monday, at 10 a.m., we have a red folder on the US dollar. All right, ISM manufacturing PMI. I have no idea what that means. But if you're somebody that wants to know what that means, just click on the folder. All right, and you scroll down and it'll let you know what that is. All right, and look, it gives you a section on why traders care. See, the reason why traders care about this red folder right here It's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. I have no idea what that means. But what I want to know is if it's a red folder. If it's a red folder, I'm staying away. I'm not trading the US dollar around that time. And give it about 2 hours. All right, so at 11 a.m., 10 a.m. on Monday, stay away from the dollar. It has got some news going on. All right. Tuesday, all right, around midnight, the Australian dollar has red news. 6:45 p.m., the New Zealand dollar has some news. We don't trade those pairs anyway on Cashtrap, so we're good. All right, on Wednesday, all right, at 10 a.m., we got some red folders. So when we trade together as a family on Wednesday morning at 10 a.m., let's remember this call, and let's take a look at how the US dollar moves at 11 a.m. on Wednesday. All right, we may see some erratic movements with the Euro USD and the US dollar versus the Japanese yen. All right, so you want to make sure that you are in the clear. All right, now this week, shout out to Dre, that's why he's Master Trader Dre, is NFP week. All right, non-farm payroll week. All right, so what that means is the very first Friday of the new month, which is on the 7th for us this month, all right, is NFP. All right, so on Friday, you will see red folders across the board on the US dollar and the Canadian dollar. All right, non-farm payroll. This is when the unemployment rates go out. All right, employment change. This news moves the market very, very rapidly. All right, so if you want to check out what that means, you click on the folder. All right. Job creation is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity. So job creation is an important leading indicator of consumer spending, which accounts for the majority of overall economic activity. All right, so when there's rapid changes in employment rates, that moves the markets. All right, so this is the first thing that you want to look at when you're sitting down and you're starting your trading session, no matter what time it is. Open up Forex Factory, go to calendar, and see if there's any red folders during the times that you're trading. If there is, stay away from that particular currency at that time. Now, once you got yourself in the clear, you can remove that and you can begin trading. All right, you can open up your laptop and you can look for a trade setup. All right, so if you're looking at Euro USD, purple line is at the top. If it's at the top, I'm only looking for down arrows. I come down here, I see an up arrow. This is not what I want. I'll leave this trade alone. There's nothing else for me to analyze. The arrow's pointing towards the purple line. There's nothing else to look at. Unless I'm gonna wait for price to go up towards this area and I'm gonna look for my down arrow. But if it's an up arrow and price is all the way down here, there's nothing for me to look at. On to the next one. All right, so now what I'll do is I'll open the lines up for any questions. You can type your questions or you can unmute yourself. So any questions? Now or forever, ever hold your peace.
Hello?
Hello,
Can you hear me?
I can.
All right. So this is Erica, and I have a question about the arrow up, the candle before the arrow up. So the candle before the arrow up is what we're looking at for the trade, right?
Right. So when you're trading, you want to anticipate the next candle because you want to get your entries very fast. So this is why I wanted to do this call now while the market is closed. And then tomorrow we'll look at these same setups when the market is open, and we'll show you how we wait for the next arrow to open up. So let me go back to Euro JPY. All right. Now, if I was looking at this trade, and I notice the purple line is at the bottom, so I know I'm only looking for up arrow trades. It's only up arrow trades. But let's say when I saw this setup, I'm still in this candle right here. There's like a minute left on this candle, all right, on this red candle right over here. Let me actually mark it up. See, I'm looking at this candle right here. And I noticed this long red candle's going towards the green Bollinger Band area. So that's letting me know it has to start bouncing back up, all right? And I know I'm looking for up arrow trades because of this purple line at the bottom, all right? And we have our currency strength in favor. So when you'll notice is, here's some other source. That was a great question. When you're taking trades, never take a trade with less than 2 minutes left on the countdown. Now, how do you pull up the countdown? Before, the countdown was pulling up by itself. Now, if you don't see the countdown, on the right-hand side where you see price, just right-click, and then you're going to see something that says countdown. And you click on countdown. All right, so when the market is open, it's going to actually give you a countdown of the next candle. So the source for the entries as well, yes, this call is being recorded. Never take a trade with less than 2 minutes left on the candle. Just sit and wait. So if you notice on the call, myself and DeAndre, when we're looking for a trade and we see something, we'll say, okay, wait, guys, we got a minute left on this candle. Let's wait. Right? Because we want to wait for this candle to close because each candle is 5 minutes. Right? So you never want to take a trade here because normally, this is a 3-minute trade. So if you're taking this trade with a minute left, you're going to be in the trade on this candle and on this candle. You don't want that. So just wait for this candle to close and then wait for once this candle closes, the next arrow is going to flip over to this candle. But wait for the arrow because it's going to give you a precise entry. All right. And as you can see, this entry was wicked. All right. And it continued going up. All right. So you want to anticipate the trade on the candle before, wait for that new candle to open up, and then the arrow will follow. Once the arrow follows, then you can identify where your precise entry will be, and then you can take the trade. So hopefully, Jericho, that answered your question.
Yes, that did answer my question. And one last thing, that is for 5 minutes. So with the 5 minute, do we have to take 5 minutes or can we do 3 minutes?
For this strategy is calling for a 3-minute trade.
3 minutes, okay.
3 minutes. I know we got some 1-minute gangers on the call, but I've learned from somebody who's able to take his account from $500 to $1.4 million. And he did it by taking 3-minute trades. So I don't want to reinvent the wheel. I'm just going to follow what he did and take 3-minute trades. All right, because my job is not to look better than him by taking 1-minute trades or be cooler. My job is to duplicate what he did. All right. Any more questions? No questions? No questions means I've absolutely done an amazing job on this training. Can you go over the candle and prices? You have an exact question on the candles, or so like these red and blue bars, those are the candles.
Right.
All right. So the blue candles represent price going up. Price is right here on this right-hand side. All right. So what you will notice is that price is at 124 point whatever. Price is going to move by the last three numbers. That's why when we're calling out a trade, we always call out the last three numbers. All right, because that's how small price is moving. All right, so blue candles, price is going up. Red candles, price is going down. All right, so on a red candle, when the first 5 minute opens up, when a new candle opens up, price opened up right here at the top of the red candle. So within 5 minutes, price was as high as this price, and it went down as low as this price. All right, so when it closed, price closed down here. And then it opens up again at the top of a red candle. So during those next 5 minutes, it went as high as this, and then went as low as this. When that 5 minutes was up, it closed down here, opened up the new candle, opened up right here. During those 5 minutes, it went as high as this, and went as low as this. But it closed right here. Next 5 minutes opened up. It opened up right here at this price. And went as low as this, and it went as high as this. All right, so in the next 5 minutes, it closed at the top of this blue candle. On the blue candle, it opens up at the bottom. So within 5 minutes, price kind of stayed the same. And it just keeps on going. So each candle represents 5 minutes in the market. So this candle, let's say the 5 minutes was up on this candle, it will close right here. The new candle will open up right here. If it's a red candle, it's going to close down here somewhere. If it's a blue candle, it'll probably close up here somewhere. All right, so those are what candles and prices are right there. So hopefully that made sense.
Thank you.
You're welcome. Any other questions?
I got a question,
Yes.
Rinaldi. If the Bollinger Bands are spread apart, does that change the amount that you would risk? As far as if it's a good trade, but the Bollinger Bands are not tight, should you make it a 1% trade, or does it matter?
That's a great question. All right, and I know the person who actually showed me that and opened my eyes to that was Mr. DeAndre Tinson. All right, so when the Bollinger Bands are spread out like this, all right, you want to be very careful, right? We like to take trades. All right, see how these are all tight right here?
Right.
That's the kind of trades that we want to take. But when the Bollinger Bands are spread out, let's say you said, you know what, I wanted to take a trade right here. It's coming down here. It's going to bounce right back up. But when this next candle opened up, it blew past this first Bollinger Band and going towards the second one. So you probably would have had a great entry in the wrong direction. And then in the next candle, it's continued to go down, because you can see that wick right there. All right. It continued to go down and it hit the second Bollinger Band. All right. So I know DeAndre's going to talk more about that tomorrow. All right. But if you can, off the Bollinger Bands, look for tight Bollinger Bands where all three of the Bollinger Bands are together. So if you do take a trade where they are spread apart, yes, take a lower risk.
All right. Thank you, man.
You're welcome. What about the engulfing candle? What's the question? Okay, let's recap the first 3 steps. Step 1, you want to identify the purple line. Is it above or below everything? If it's above everything, only looking for down arrows. If it's below everything, you're only looking for up arrows. Step 2, where's the arrow? Is the arrow pointing towards the purple line or away from the purple line? You only take trades with the arrow pointing away from the purple line. All right? And the third step is the currency strength. If the purple line is at the bottom, that means we're looking for an up arrow. If we're looking for an up arrow, that means we're looking for the first currency to be stronger than the second currency. If the purple line is at the top, that means we're looking for a down arrow. That means we need the currency strength. We need the second currency to be stronger because we're looking for a put or a down arrow. All right? So as you can see, all three steps are in unison with each other. And if there's any missing piece to those first three steps, you're in a greater risk of losing that trade. All right? Boom. Perfect. He says it's a 5-point training. Appreciate you. So yeah, so tomorrow, all right, expect even more fire trading, all right, tomorrow by my bro, Mr. DeAndre Tinson. All right, so he's gonna show you guys what I just did with you guys on a closed market, all right, and we're gonna get on tomorrow, and you guys are gonna be able to see each candle open up, all right, each arrow move from one candle to the next candle, all right, and we're gonna just show you guys how it looks in person, all right? So appreciate you guys, love you guys. Let's go out and let's rock out the next week, all right? We wanna make sure you guys are very prepared to dominate these markets. And the goal, 100 six-figure traders by December 31st, 2020. It's absolutely done. Drop some 100s in the chat if you are the next six-figure trader. There it is. Look at that. Jerica already got it written out. So it's done. Let's go. You guys are amazing. And let's promote for tomorrow's training with Mr. DeAndre Tinson. He's going to take what I just showed you guys and he's going to bring it to life. All right. So good night. God bless. And let's go.
Good night.
Good night.
Night.
She wanna walk. She wanna do. She wanna